Video game maker Electronic Arts announcing a $55 billion deal to go private in what is set to be the largest leveraged buyout deal in Wall Street history, led by the Sovereign Wealth Fund of Saudi Arabia. Steve Kovac has more in today's Tech Check. Steve.
Yeah, this is a big one because I really wanted to look, Sarah, into the Saudi Public Investment Fund and all the money it's been spending on gaming as it's been pushing over the years to build a video game juggernaut. It's encompassing everything from the hottest mobile gaming properties to giant esports tournaments out there in Saudi Arabia. Now, the WSJ report that came out on Friday initially about this deal sent shares of Take-Two Interactive and Roblox higher on this idea that there's going to be even more consolidation and M&A in the video game space. And if that's the case, the PIF actually already stands to benefit as it's been gathering stakes in major gaming companies for some time now. Within that PIF gaming empire, before today's announcement, it already owned nearly 10% of Electronic Arts, which will, of course, be rolled into its ownership stake in this new deal. It also owns about 6% of Grand Theft Auto maker Take-Two and about 4% of Japanese Nintendo. Plus, it acquired the Pokemon Go game this spring for $3.5 billion and bought the parent company of Monopoly Go, which is a huge mobile game, for almost $5 billion. It's also sponsoring huge esports competitions like the annual Esports World Cup in Riyadh that's been held the last 2 years. And Crown Prince Mohammed bin Salman himself is a gamer and a key driver behind all those deals. And David Faber, by the way, reporting this morning, Sarah, the PIF is, of course, going to own a majority of EA after this deal closes, with Affinity and Silver Lake splitting the rest. It also comes amid a slump in the video game industry. Just take a look at EA's annual revenues over the last 5 years, relatively stagnant over the last 3 coming out of the COVID lockdowns. And the stock is up only 56% in that period, lagging behind the S&P, which is up about 100% in the same time. And Electronic Arts is going to be taking on about $20 billion in debt to finance its part of the deal, which could put pressure on the company to keep costs down or add more monetization options to their games to juice growth. Now, this deal is not done yet, Sarah. EA has 45 days, according to David Faber, to solicit other offers before taking this one, guys.
Of course, the street, Steve, is anxious to name other names that might benefit from a continuation of this trend. Take-Two gets mentioned, obviously. Yeah. Roblox today. Even AppLovin I'm seeing on some desk notes this morning.
Yeah, Apple, and I would definitely look at Take-Two for a big one. Roblox is kind of a secular story here. They're actually growing like crazy this year. I forget what their stock is up now, but they've been having a killer run just in terms of users and revenue growth. You don't see that so much as at Take-Two and the more traditional gaming publishers. And, of course, there was Activision. I bet Microsoft kind of regrets now buying Activision for as much as they did, because as they were going through that process in 2022, 2023, just so much of the value of that company was already left because of the slump in gaming I told you about. So there are a lot of there are not too many public companies left to be in the crosshairs. I was joking earlier, Carl, that I'm running out of public gaming companies to cover because they either get acquired or go private, it seems like.
Yeah, worked yourself right out of a beat, but you're
exactly.
Right about Roblox. Yeah. Roblox here to date. That is a heck of a chart versus the S&P.
Indeed.
Steve, thanks. Talking a bit. Steve Kovac.